Hi everybody, Steve here, and thanks for attending this special bonus webcast, Markets of Your Choice. As you know, we sent out a few emails asking for your markets or market of your choice, whether it's a U.S. market or a Forex market, or for those of you who asked for an overseas market to include the chart. So we do have our list already. Many of them are markets that many of you trade already, but even if you don't trade or invest in these, I think you'll get a lot of information out of how we do the analysis on these markets. And by the way, this will be recorded and will be sent to you on today, Thursday. It'll be sent to you on Friday. But before we begin, let me just mention this very briefly with the markets of your choice. We have a brand new seminar, well, I shouldn't call it a seminar, small group coaching. It's a program for success-minded traders where the only two Nison certified trainers will guide you step by step on how to overcome your trading obstacles and enable you to achieve your trading and investing success. And this is the link. And the reason I wanted to mention it, we are only allowing 10 students in. And although we sent out only 1 or 2 emails, and this won't be for a few weeks yet, we only have 3 spots available. So I wanted to bring this to your attention. So for those of you who want to take advantage of this small group coaching, go to this link before we close out, because last time we did this, we closed out and there was a big waiting list. So just want to give you a heads up on that. Now let's do some analysis here. Okay, so first we'll be looking at the S&P, and okay, so what I want to do is, and this is one of my favorite concepts, okay, the change of polarity. So what happened is once the market broke above, and we put out an alert on this, once the market broke above this resistance area, see the shooting star here, confirming resistance over here. Once it closed above it, this old resistance should become support. And look at that, almost to the tick. And so now the support area held, and the challenge now becomes, how do you get a price target, because we're in uncharted territory. So one thing you could do, you could view this as kind of a swing target. You go from the low here, let's round it off to from about 2090 to about 2211. Let's make it 2210. So I'm doing the math as where, so if I'm doing it right, it's 120. Is that right? So we add 120 to the correction low, or 1200 I should say, to the correction low of, let's see, what is this here? Let's say 2200. So we have a target of 2320. So essentially this is just a measurement here. Okay. Okay, can everybody hear me? Everybody see the chart and everything? Because we're getting some people who say there's no sound. I just want to make sure I'm coming across okay. Yep, good. Okay, thanks, Chris. So as I was saying, and by the way, for those of you having an issue, obviously if you have no sound, you can't hear me saying this. But anyway, for those of you who have a video issue, for some reason you're not seeing the chart, I'm not sure why. Maybe you have a slow bandwidth or something like that. This will be sent out as a recording. So essentially, this is what's great about candlesticks. You could use Western technical measurements on candlestick charts. So essentially, go from low here, as I mentioned, to high here, and view this as the swing measurement and add it to here. So that is our target, 2320, and this is critical support. Long-term trend, by the way, the 20, I look at the 20 and the 50-day moving average, and the 20 is above the 50-day, so the long-term trend is up. So let's look at another market request we got one from Joe for Citi. And what's going to happen with a lot of these markets, we're going to be in uncharted territory. So, you know, getting price targets is going to be a challenge. So, yep, well, Citi, at least we have, you know, we can go back a few, we can go back a few weeks. But let me get back to the daily chart here. Long-term trend is up. Let me compress this. 20 is above the 50. Resistance area here. This, although this has the same shape as a shooting star, long upper shadow, small real body, really not much of an uptrend, but the long upper shadow, because you want a shooting star coming after an uptrend, but the long upper shadow is showing an area of price rejection. So this is the first resistance area. And as for support, we could look at a rising support line. See how nicely that held over here. This to me is minor support. The more important stuff is the lows here over the last 5 sessions, right over here. So let's go to a weekly chart. And what we're going to do is, whoops, or monthly chart. All right, a little hard to see here. Let me just extend this. Okay. So we're actually right at that level, right around the $60 level over there. So on a close above 60, especially on a monthly basis, which we have a few weeks, you know, that would be a multi-year breakout. Look at this base. So it'll be interesting to see what unfolds. Let's get back to the daily chart. Wendy requested UUP. Okay, the rising window is first support. And by the way, let's just assume the intermediate term trend on all these markets is up, unless I say otherwise. So I won't have to go through each of them, because likely the 20 is going to be above the 50-day moving average, and they're both sloping up. So we have two things going on here. Obviously, the rising window, one of my favorite candlestick signals. But even if the market closes below the window, where would you see next support? Remember we were talking about with the S&P, one of my favorite techniques? Okay, so let's say the market closes under the window. Where would we see next support? And I'll give you a little hint. Look for a resistance area, prior resistance. Right around where the doji is, exactly. So from here, yeah, good call on that, James and Matish and a lot of others. So this was the old resistance area. Now the market closed above it, nice tall white candle. So this should be key support. Close under that would be a false breakout, a falling off the roof, and that would imply a return to the window down here. So as far as UUP up is looking, the market is looking up. There's not a shooting star. Upper shadow is not twice the height of the real body, but I'm telling you, even if it was a shooting star, not much you could do with it, because even if this was a bearish signal, which is not, you're looking at first support here, and this is the value of education. You know, knowing not only what the candlestick signal is, but what to do with it. So for example, here, look at this. Anybody recognize this signal here? It's a hammer, right? Over here. So until the market, now that's normally a bullish signal, it's actually confirming a rising window here, but look, what do we have as resistance? Over here, right? A falling window. So yes, there's a hammer, a bullish signal, but if you're buying at the hammer, you're buying right at resistance. So in this case, you'd have to wait for a close above the window, which happened here. So this is bullish confirmation, because one, you had the hammer, and then secondly, you close above resistance, and then look what happened after that. So once again, the value of education. I'll be telling you in a couple of minutes how you can get a week of our very, very popular member site where we do analysis like this each day. We do the major markets. We do markets of your choice for only $1. Okay, I'll give you details about that a little bit later on, because education is what it's all about. Okay, so we're going to go through here. And a quick question, what's the difference between a hanging man and a hammer? A hanging man comes after an uptrend, and a hammer comes after a downtrend. Okay, we'll look, okay, GDX, Mini wants GDX. GDXJ, I should say. And we'll be looking at some overseas markets for those who have requested. Wow, this is one of the markets that's actually down, gold, okay. So long-term trend is down. And falling window, and this is kind of the flip of the other one, where we had a rising window. All right, so even if the market closes above the rising window, where is our next resistance? change of polarity, right? So the falling window, then the change of polarity. So on any rally, this is going to have a lot of issues. And then above that would be 36. Yeah, Matish, yeah, 36 would be just the highs over here, which tested the highs over here. So right now, long-term trend is down. The market broke support with a long black real body, open near the high and close near the lows. Here on the daily chart, and what I'll do is normally look at a weekly chart to get the next support area. A tiny rising window over here is next support based on the close. So far we're under it. It's not the end of the week. And then under that, minor stuff down around here. But you can see what's happening now is kind of a mirror image. See this rally from this hammer down here, also this morning star. So just as the market moved up, and I'll draw a vertical line here to show you kind of a mirror image. Let me do this a little better. Okay, so think of this as you're folding paper in half. So just as this moved up, see what's happening? This is kind of a mirror image here of the rally over here. And interestingly, notice how down here the market held support a little bit, just as it did over here. So if this holds true, all right, and this is probably something you don't normally see, because this is something I found when I was doing my analysis, when I used to do institutions and market advisory for the institutions back when there were a lot of specialist firms, and I do stuff for JP Morgan and Morgan Stanley, you know, a lot of shops that aren't around anymore. But this is something that their traders liked a lot, because this really wasn't something that you see normally in general technical education, but it's kind of a mirror image. So if this mirror image continues, okay, like I said, notice how this is kind of a reflection of that over here. The long-term target is all the way down here. Again, you know, it's a far distance from here, but something to keep an eye on. And this is kind of a nice strategy when you see something like this. It doesn't happen very often, but I want to give you a heads up. Okay, we will look at the euro now. And we are getting a lot of questions, you know, asking about markets here in real time, and questions about the candles. And it's real. We really want to focus on the markets that you requested before. So if I have time, I'll get to some of them, but there's a lot of markets I want to go through. And again, hopefully during the analysis, it will address some of the questions that you may have. So let's look at the euro. And this is one of the markets we look at every day. We look at the euro in our member site. We look at the euro. We look at gold. We look at silver. We look at crude. We look at the S&P. Okay, long-term trend is down. And this is something, you know, you'll see me use time and time again because it just works so well. Change of polarity is new resistance. Now, if the market does close above, I'd say this level over here, that would be a crack and snap. Just to refresh your memory, what that is the market breaks into support and snaps back up. So any decisive close above 105, 105.10 in that area, then that would show the bulls couldn't hold the new lows. And in that case, let's say 105.50. Oh, let's say 105.50 to be safe. In that case, we would look for a return to the most recent high. Now that becomes somewhat subjective. Is the most recent high over here, or is the most recent high over here? So what I'll do is say, okay, this would be a conservative target, and this would be my more liberal target. Now let's look at, so this is resistance 1, 2, and 3, and we'll go to a weekly chart, and you can see the importance of this level on a weekly chart, i.e. meaning a Friday close. Okay, any close under 104, let's say 70, would break a support that's been in place since March of 2015. Okay, and right now we are under that, but the market has not yet closed on a Friday. And we go to a monthly and a yearly. And I remember this very well up here in 2008 because that's when I traveled in Europe. I did Ireland, and I forgot what other country I was in, and I happened to be traveling at the weakest part of the dollar. So anyway, let's look at the monthly, and let's go back. And again, because we're going to be compressing this, we won't be able to see the candles really well. Okay, we're looking at a monthly now, in case the market does break those lows from March of 2015. And just look at these lows here, right around 95.50 over here. Okay, we'll go back to the daily. Let's look at Apple. And as I mentioned before, a lot of these markets that you requested beforehand are markets that many of you use. All right, so here, interesting stuff going on here. Now, every day is a white wheel body with a higher close, right? What's a cautionary signal? What do we see here that's giving us a little bit of caution? And we did close above the high of the doji, so that's a positive. You know, we still have the window as resistance. Over here, falling window. Okay, but what's happening? Oh, yeah, James really has it. The market's rising in agony. Great, you're a good student, James. Yeah, that's one of the expressions the Japanese use, that the market's moving up, but the long upper shadows are showing us that the market's rejecting higher levels. And as James says correctly, you know, echoing the Japanese term, the market's rising in agony. So it's one of these things where I'd be nervous about buying it because, one, you're at resistance to the falling window and the major highs over here. But you know, it's still, maybe it's a place you think about taking some profit. But all in all, mixed signals. The market's moving higher, but the long upper shadows are showing us the market's rejecting high levels, but it's still making higher closes. So there's still some bullish momentum in there. But the resistance levels here, and by the way, the long-term trend, I would view it as neutral. Although the 20 is below the 50-day moving average, notice how the 20-day slope is moving up and they're converging. So I'm viewing intermediate-term trend as neutral. And one of the disadvantages of using long-term moving averages is it's lagging. So although the market's been rallying the last week, notice how the longer-term trend is just starting to turn now from negative to a little bit less negative. So that's why I think, you know, the candles are the great signals to give you the early indication of a potential turn. And you could use the longer-term moving averages to kind of get a sense of if you're placing a trade, are you going in the direction of the longer-term trend. And as far as support is concerned, as long as you have a resistance level tested a couple of times, you could use change of polarity. Resistance, 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 market close above it. Yes, there was a doji, and we saw this before with a hammer, right? You had a hammer, but it was right near a resistance area. Same thing here. You have a doji, it's a warning signal, but you're right at support. Okay, we'll look at we'll look at IBS, Andrus, if I'm pronouncing your name correctly. Okay, the Biotech. Interesting stuff going on here. Okay, intermediate-term trend I'm viewing is up, but a little nudging more towards neutral because the 20-day slope is down. Ideally, when you want an intermediate-term trend, you like both slopes to be in the same direction. So notice here, this is sloping up, this is sloping up, long-term trend is up. Here, this is sloping down, this is sloping down, the long-term trend is down. So although the 20 is above the 50, the fact it's sloping down means the upside momentum is flagging longer term, and you get a sense of that. Obviously, over the past couple of weeks, we've been in a bear channel, but based on a close, we are still holding support at the window. Okay, if you want intraday support, you do the lows here. A bullish engulfing pattern, also a reason for support, and then under that would be the rising window over here. And this looks like a piercing pattern. I don't have Candle Scanner up now. That's our software that highlights all my favorite candlestick signals. But I'm visually thinking this is above the middle of the black wheel body, so this is a piercing pattern. And as far as resistance, looking at it, let's see if this is still holding. Yeah, this is still holding. But I'm not big on angled trend lines. I just like horizontal support and resistance better, as many of you know. So I'd be looking at this level as a resistance area. And then, of course, the bear hardening. but this is holding as support. KSTM. Okay, let's go to weekly. All right, so here, nothing really on the daily over here that I see of consequence. The weekly, same thing. We have to go to a monthly chart to get a sense of where the next resistance is, and we're right there from the highs of 11. Okay, we're actually above it. Okay, so any close above 1010 would be a break. Look at this base over here. And then above that would be these long upper shadows right around $14.50. And first support, use the change of polarity. Again, this is based on a monthly chart. So this holds a resistance band over here as support. Okay, Newmont. Okay, not quite a bearish engulfing pattern over here, but close. Okay, ideally the black wheel body would wrap around the white wheel body. Actually, let's do it daily, sorry. Okay. All right, so here we have a bearish engulfing pattern, and we'll be looking at the longer-term chart in a minute. And I'm going to move this up a little bit. Okay, long-term trend is down. The market gap down. And just at first support, this is not a piercing pattern because the white wheel body did not get more than halfway into the black wheel body. So normally it's not as critical a support area, but this is our first support. Actually, let me make sure we have, whoops, yep. This is our first support over here, the falling window. Then what we could do, and what I tell people is on a scale from 1 to 10, this is kind of like a 3. It's not that important. But if you have a long black or white wheel body, you could use the middle of the wheel body as resistance over here. And actually, what I'm going to do is, because it was a price support area, I'm going to nudge it a little bit. So normally I was kind of eyeballing it around here, but I'm going to make it, because of this, see 3 days of support over here. So this would be the next resistance, and then the more critical of resistance would be this long black wheel body that wrapped around this white wheel body over there. Okay, and then as far as longer term, look at a weekly. Okay, so the highs over here and the highs over here. The market closed above it. Look what became support. Okay, so that would be our next support area under the lows over here. Yeah, pretty ugly chart, Brock says. Yeah. Okay, Steve requested Facebook. Okay, so this, I'll tell you what's going on here. I would view this, let's go from here. Whoops. So I was going to say from here to here is a box range, but I'm going to move it up to here. Okay, so this is the top of the box, the lateral range, this is the bottom. And normally we say if it breaks above the top of a box range, it's bullish. We take the height of the range and add it to the breakout. The issue we have here is this falling window. And not only is this a falling window, what else do we also have? That's, of course, caution for concern. Even if the market does close above, let's say 124.5, what else do we also have? Right, change of polarity. Yeah, and a moving average course also, you know, some people look at moving average, but exactly. See, because here's a hammer, look how nicely this hammer worked to confirm the support area. The market rallied until a bearish engulfing pattern came down to the hammer here, then gap down. So yeah, you have the falling window, you have the change of polarity, because anybody who bought here or even here is now losing money, and they'd be thrilled to break even, so all the buyers here or even here become sellers. So normally I would say, okay, it's great to be thinking about doing a momentum trade, buying on a breakout. I can't recommend that because you're right near resistance, but right now we are still in a box range, another market rising in agony. It's moving up, long upper shadow showing issues near the prior resistance area. So this is the resistance zone here, then you have resistance over here, and support, rising support line. And then I'll look at a Fibonacci retracement. I like 50% retracements for those of you who look at our analysis in mycandlecharts.com. So let's go from over here, the most recent. So 50%. Whoops, sorry. 50% of the rally, assuming the market pulls back from here. So 50% would be right around the 118.30 area. But the key support is down here, the bullhotomy, and the bottom end of the box range. Long-term trend is still down, but the 20 is starting to turn up a little bit, but the 20 is so far below the 50-day moving average, I still view the long-term trend as down. What that means is the odds do favor a break to the downside rather than a break through the upside. Okay, some of these, unfortunately, I don't have markets for. Let's do crude. Okay, a lot of you requested crude. Then we'll look at the Indian market. We'll look at IBM. We'll look at a commodity. So let's look at crude now. Again, this is one of the markets we look at each day in mycandlecharts.com. And actually, let me do this now, and then we'll get back to some of the markets. Let me just pull up this because I'm getting a lot of requests about. I'll go through these markets in a minute. But what we're doing now, and again, I'll get back to the markets in a minute. What we're actually doing now is something we do twice a week in mycandlecharts.com. And each day we do a recap where we go over a dozen markets: crude, the S&P, the currencies, the Dow, the NASDAQ, and so forth. We do that every day. Each day you get a trade set up that you can implement the very next day. We do special topics. We have blogs. This is one of the most popular segments, a chart challenge, where we pull up a chart and we ask, what would you do here and what do you see? And what we're going to be doing for the next couple of days is allow you to access all these features. I mean, I don't have nearly enough time to go through all the great stuff you get here: options, Forex Focus, for only $1 for a full week. You go to this link here, candlecharts.com/myccdemo. MyCC stands for mycandlecharts.com, and 1 full week for $1. And just to give you a heads up, you have to register by December 18th, which is, let's say, Thursday. So that's Sunday, I think. Yeah, by December 18th, whatever the 18th is. And just to clarify what that $1 means, it's only going to be $1, and you'll get 7 full days. And unless you cancel or upgrade, we have a 6-month or 12-month plan, you would then automatically be put on the $107 monthly recurring plan. But you can get this for $1 for 7 days. Most people will do the 6 or 12-month plan because they want to lock in the low prices, because we'll be raising probably our prices next year. So if you have any questions about our 6-month or 12-month plan, you can contact Paul at candlecharts.com. So I just wanted to give you a little heads up on that. So let's go back to our markets du jour. And as I mentioned, we're going to be looking at crude. And I'll show you here. These are just some of the markets we look at each day. Okay, the NASDAQ, the S&P, the Dow, the FTSE, the VIX index. These are all, every day we go through all these. So one of them we actually go through is the euro. So let's do that. I think we did we do the euro? Yes, we did the euro. Okay, I knew it looked familiar. Yeah, we have a lot of multiple requests, so we got requests. I'm sorry, we were doing crude. I knew. Okay. There we go. And we're looking at the nearby continuation. So I would view this as a shooting star, long upper shadow. Normally you'd like to see a shorter lower shadow, but nonetheless, look at the rally here and the market rejected it. But of course you have the rising window. The market now closed below it. All right, so that damaged the market. We're now looking or holding it for support, but some of you may recognize this. Okay, so this was an old resistance area, right? It was a rising window. This should have been support. All right. This should have been support. Oh, a lot of people are asking for the link for the mycandlecharts.com. Let me put that up very quickly. And actually, I'll just cut and paste it here. Let me just put it here. So it's candlecharts.com/my-demo. Sorry, I just took that off so quickly. So candlecharts, www.candlecharts.com, www. And actually, let me just do this on the fly here so we don't forget. There we go. Okay, so it's www. It doesn't have to be capital. candlecharts.com/mycc-demo. Okay, thanks for the heads up on that. We got a lot. I know I took it off pretty quickly. So anyway, getting back to this on the crude. So the change of polarity, right? And as many of you who are familiar with our education, James and Brock, and I recognize a lot of names, right, are falling off the roof. So what was the most recent low here? That's the target. That would be over here. That would be my conservative target. My more liberal target would be down here at this huge bullish engulfing pattern. So first support, then minor support. Based on that concept, the middle of a black or white wheel body would be here. This to me is, again, not critical. This to me is much more important. But I think we did damage in crude by the failure to hold above the highs. Okay, and this is our next resistance over here. Let's look at IBM and we'll look at some overseas markets. Okay, longer term trend is up, but any problems here? Long upper shadow, high wave candle showing confusion. This is a gravestone doji, or almost a gravestone doji. A classic gravestone doji is when the open, the low, and the close on the lows, and this is very close to that. So, you know, I don't want to say the rally is done yet. We're holding up very well near the highs, but we could see clean-cut resistance at 170. Market's having a lot of problems there. And what I'd be looking for as a support level, let me see if I see anything. Again, multi-tested resistance. And you can do this in a lot of the markets now because a lot of the markets broke above major highs, so you could use those highs as a resistance area for the change of polarity. So market got above it, and it held for the couple of days here. So this is the critical support. Close under that, we would then give a target to the lows over here. And here's the next major resistance area where we are looking at a monthly chart. Okay, up at the 181 area. Okay, so the question, if I was in the stock, would I get out of it? I would take some profits, yes. But I would stay net long. And then what you could do is if the market closes above 170, if the market is solid, that old resistance should become support. But yeah, it's certainly not bearish enough to say, hey, go short, but kind of a warning sign that the market is having some near-term pressure. And if you're looking for an area to lock in profits, you know, this is fine to do. Again, but I would stay net long because notice the market is holding up very high, holding up very well. But this gets me nervous. This gravestone doji gets me nervous. Okay, okay, let's look at some. We had said if you wanted some overseas markets or markets that we may not have quotes on to send a chart, so we will look at that. Whoops, we go back here. So let me just extend here. We're going to look at the Nifty, the Indian market, and unfortunately whoever sent me this didn't give me enough history to get next support, but let me show you what I'm looking at here. Again, because we don't get this, I mean we get it, but because I don't have access to my normal computer. As you know, we do now have access for the for those who have Nison Candle Scanner and NinjaTrader, and Tracy has done seminars on our international markets. We do have access to international markets, but because I'm not at my normal computer, I did ask to have some screenshots sent, so that's what these are about. So here, okay, this is, many of you recognize this, the market broke under support, got back above it. What is that? Crack and snap. With a crack and snap, what's our target? The most recent high. Did we reach that target? Indeed, yes. All right. So right now, my first support is this. This is minor over here. Although the market did break under it, because it held in so many sessions, I'm going to still consider this minor support. The more important support here is here, and resistance is over here. So this is a box range. I'm going to view from here. I'm viewing this as kind of an emotional aberration and kind of forgetting about this for now as far as the measurement is concerned. So I'm viewing this as a box range. This is the top end of the box. This is the bottom end. If the market closes above the top end of the box range, above 18,800, that old resistance should be supported. You could take the height of the box range at 600 points and get an upside target of 19,400. But as of now, this is a key support area. And what I'd normally do if I have live markets, I'd go down a weekly chart to see what next support is under here. Okay, let's go to the next one. Okay, an ITC. Okay, Deepak has been asking about it. He actually put some comments about it in here. So let's go through these. So he went short on a bear sash over here, a little hard to see, at 228, and his target is a recent low. That's a perfectly fine target over here. Now, he had mentioned there's a window here. This window is no longer support. Why? Why is this window no longer support? Okay, we're approaching the window, but why is it no longer support? Right, James, the market closed it below it. So it closed below the let's say 226 level over here. So we no longer look at this window. So as Deepak shows here, we do have another rising window. Look how nicely that held as support. So down here would be my next support area on a close under here. He is asking, is this a box range breakout? The target as per that is 203. Okay, which coincides. Okay, this to me is not a box range. A box range is when you have a support area tested over a period of time, like support here and resistance over here. Let me see if I can find a box range for you. All right, so this is something like that. This would be a box over here. And actually what I'm going to do is, so I could draw it line here. Okay. And let me just make this a little thicker. Okay, although it didn't work out, let me show you. See, this is a box range. You have multi-tested resistance and multi-tested support over here. So that would be a box range. This really was not a box range. But the fact that you have the change of polarity over here, and the market stalled there, perfectly fine. I think to do a short sale there. This would be my target. Then under that would be the rising window. Okay. Next one, copper. Gary says he's in a swing trade, and he's been short since the second shooting star. Now, by the way, this is not a shooting star because the lower shadow is too long, but nonetheless, long upper shadow is certainly to be negative, something to be negative about. And as you mentioned, this is a retest of the shooting star. This is a classic shooting star. This is almost a strict, for those who have our software Nison Candle Scanner or our advanced education, our mega package, you know, we have something called strict criteria candle signals, where I tighten up the candle signals to make them more likely that they're going to work. And this is a strict criteria shooting star, where you have a red real body that closes right near the low, so that is more likely to be a reversal than if you had a green real body. Anyway, as correctly pointed out, Gary, the shooting star becomes resistance. The market's still there. And Gary has his own moving averages on his own Western indicators, and whatever you use, stay with it and just add the candles. So we did have resistance here. He's short. He's holding the position until the change of polarity over here. Now, this is not a change of polarity, because a change of polarity means you have to have prior resistance. Unless you had prior resistance over there. I mean, if you had multi-tested resistance around 244, 245 in that area, that would be change of polarity. But the way this chart looks, based on what I see now, this is just a prior low, just a retracement low. So that's a perfectly good reason to look for our target down there. So, and if the market breaks above 275.30, obviously this old resistance should become a support level. So let me get back to, I'm getting a lot of questions now about if we haven't sold out already. Let me go through here very quickly again. All right, so here is the special demo for $1. Then I'll get to the Kaizen in a second. Candleshots.com, MyCC demo. You get a trade set up every day. You'll get it for $1 for a full week. You get a chart of the day. A chart of the day, by the way, is where we do education. We'll pull up a chart and show you a strategy. A lot of stuff like I talked about today, for example, we show you a candle signal and the importance of candles and context and so forth. So go to this link if you want to lock in the prices that we have for this year before they potentially go up next year. You can contact Paul at candleshots.com to find out about a 6 to 12 month plan. And once again, we may not have any spots left after today, because again, we have a lot of people on this webcast and a lot of people will be watching this video. 3 spots left. If you want to find out about the small group coaching, we got tons of accolades. I shouldn't say tons, because it's a small group. We only had 10 people last time. They were closed out. And the ones who were on the waiting list sucked up these spots very quickly, so we only have 3 available. To find out about it, go to www.candleshots.com, Kaizen, K-A-I-Z-E-N. Okay, thanks for calling. Thanks for joining me, and look forward to working with you down the road. And we'll be doing these from time to time. Hope you really enjoy this as much as we enjoyed presenting it. And again, we'll be sending this out as a recording. Have a great day, everybody.